What's up, guys? Welcome back to another episode. My name's Michael, and today we're going to be diving into one of the best undervalued companies that is going to see extreme growth in the next up and coming years. That is Supergroup, under ticker SGHC. Before we dive into the video, definitely make sure to check out my Discord, link in the description. I go over the economic calendar for the week, any market updates, my closed trades, any trades that I'm partaking in, and where I think the market is. It's completely free, and definitely make sure to join. So Supergroup is an online sports betting and gaming operator. Its main brands are Betway, sports betting and casino, and Spin, a multi-brand online casino. Now, the company is active globally, targets customers in Europe, Africa, America, Asia Pacific, but primarily targeting audiences in Europe, Africa, Asia, and Canada. Now, like I said, their main brands are Betway Sports and Spinway, but they do offer a lot of other brands and products. See here, there is Supercoin, Jackpot City, Lucky Nugget Casino, Ruby Fortune, but all of these gambling platforms are online, which makes it a lot more profitable for the company and really expands their reach for customers. Now, online gambling and sports betting is increasingly getting more and more popular around the world, especially here in America. We can see from this chart that in 2030, it is expected to grow considerably. Right now in 2025, it sits at around 12.7 billion, which was in 2024, a little bit higher, but it's getting more and more popular, making this company even more profitable in their revenue. All right, so let's dive into the numbers. The market cap is 5.54 billion. Small cap company. Does offer a dividend. Right now, the dividend yield is 1.46%. Nothing too strong. Their price to earnings ratio is 24.94. I'll get into that later. Basic EPS is 0.44. Slightly low, but we're really looking for companies with increasing EPS. Now, a big thing here is their financial health. I always look at this for any company, and we can see their debt level and coverage is pretty strong. They really don't have too much debt, and their assets and free cash flow completely covers all of the debt that they do have. In terms of their financial position, they have extreme assets compared to their liabilities, which also shows, very strong signs of a strong fundamental health. So they've only been in the market for 4 years, but from that time period, they've been able to increase their revenue by a decent amount. They had one lackluster year in 2022 where they saw a negative 13% decrease year over year, sitting at 1.36 billion. But in 2024, 2023, they were able to increase it positively. And trailing 12 months, they are not lagging. 2.19 billion they're sitting for revenue. Their gross profit, they've also been able to increase. Like I said, it is an online gambling platform. Most of their assets are intangible, so no one actually has, physical assets. Although I'm sure they do, obviously, but this makes their cost of goods, a lot lower, and their gross profit has been very strong. And they're seeing one of the biggest increases that they have seen. Trailing 12 months, they're sitting at 596 million. In 2024, they were at 38.9 million, so they're not lagging there. Now, the big one is their net income. They had this very, very poor year in 2023, negative 11.41 million, but they were putting a lot more money into the company and expanding their products, which, helped increase their profitability. We can see that in 2024, they were able to get it back up to a positive number, 122.34 million, and trailing 12 months, they're not lagging on this either. They're sitting at 219.75 million. So they're not on a stock repurchase program yet. They're still kind of a new company. So we can see that in 2020 and 2021, they're sitting at around 56 million for diluted shares outstanding, and then they actually issued more. They probably held back a lot of their shares, and this was a primary offering, issuing more shares to the public. We can see that big jump from 2021 to 2022. And it seems like they continue to do this. I think this is very positive when any new company does this. They're raising more capital, and that capital can go to capital expenditures, increasing their investments, which will help increase their profitability on some of these products. It is important to note that a lot of online gambling platforms or companies, really invest a lot of money into marketing. Marketing's huge, making sure that their brand is on, a soccer team's field, whatever it be, a hockey stadium. This gives them a bigger outreach. This is big for SGHC. And, they have done a great job at really getting their main brand, that is Betway Sports, out there on a lot of soccer fields, a lot of different sports. Another thing is that, online gambling or sports betting has been increasingly more and more popular in America, and that targets certain American sports. Now, this company targets, European sports, and online sports betting is getting more popular worldwide. This helps expand the reach, offering new, different niche products or sports that people can bet on to customers, increasing their reach and making them a lot more niche compared to other companies, really making them outstand in the sports betting industry. The last important number is their free cash flow. Free cash flow looks pretty strong. Some decreases in 2021, 2022 it went down, 2023 it went down, and then in 2024 they were able to get it back up to $274 million. Most small companies are not holding $274 million in cash. They're an extremely cash-rich company. They're paying it out in dividends. I think, I'm not sure, but I think they're done issuing, most of their unissued shares. I'm sure they still have more. So I think a stock repurchase program is definitely in the horizon for this company. So this whole dividend thing is pretty new for the company. They really gave out their first, real dividend in 2024, which was 25 cents per share. Like I stated, they are sitting on $200 million in cash. They are pretty new to the market, 4 years. They were founded in 2020, so their IPO was right around their founding. I think really that, they are going to start to increase this dividend more and more. And we will actually go and look at that number. But yeah, if you're any undervalued company, like I made a video on QFin Holdings, which is a Chinese fintech company. They offer a dividend. Any undervalued company, you're really looking for free cash flow in terms of DCF, but if they're holding a lot of free cash flow, a lot of cash, they're going to be paying out a dividend. Undervalued, you're going to get extreme growth, and you're going to get that passive income investment strategy with a dividend. So that's a pro. So like I've always stated on this channel, really any stock trades off of estimated EPS, their estimated revenue, as well as Wall Street consensus. And the analyst breakdown for this company is 8 analysts are saying a strong buy, 2 are saying buy. None are saying hold, none are saying sell, none are saying strong sell. This helps raise the price considerably in the long term. So like I said in the beginning of this episode, their growth is super strong. We can see that their revenue growth year over year is 28.27%. Their revenue growth forward is 17.27%. The sector median there is 3.13%, so they're outbeating the sector pretty considerably. And their EPS diluted growth year over year is sitting at 4,677%, which is just extremely huge. But, they are definitely expected to increase their EPS year over year. And I don't think we're going to see a plateau anytime soon. They're still a new company, and like I said, their EPS is sitting at 0.44. Once we see a plateau, maybe around that 1 mark to 2 mark, depending how fast their EPS grows. So if you were to buy this company in the beginning of the year, you would have seen a 76% increase. Over the past year, it's been 58.21%. All right, so the big numbers in terms of valuation, their PE is 25.31, like I stated. Their forward PE is extremely undervalued, 13.79. Now, if I'm looking at a growth company, I want to see their forward PE maybe a little lower, maybe a little higher. In terms of a value company, a lower forward PE is huge, 13.79. And their PEG ratio is 0.44. We're looking for companies with a higher earnings per share growth compared to their PE. This is actually how I came across this company. I was using FinViz. I recommend that for anyone. Whenever we're looking at a company with smaller PEG, they're undervalued, and they're still showing signs of great growth. 0.44 is super strong there. Their price to sales is around average 2.52. Now their price to books is 7.40, a little bit overvalued, and price to cash is 11.36. Now their EV to EBITDA, 10.44, very undervalued there. The rest of the ratios are kind of average. Now another thing I was looking for, whenever I'm looking for value companies, I'm looking for extreme growth. Now, I want to find these companies before institutions start trading into them. And once institutions start trading into them, it skyrockets. You don't really, and then when you get into the company, you don't really get it at a good price. You don't really get good growth. Institutional ownership for SGHC is 15.57%, really low, super low. And then their insider ownership, the amount of insiders, CEOs, whatever it be, directors, is sitting at 69.47%, and none of them has sold anything. Insider transactions is 0%. So those are such strong companies. And a little tip for any people trying to find value investments: you want high insider ownership and very low institutional ownership if you want to see big growth in the price. Overall, I give Super Group Company a buy, a strong buy. Now, I'm no financial advisor, so take all my advice with a grain of salt. This is only for educational purposes, and do your own research, but everything looks, super strong. So thank you guys for watching this episode. Drop your opinions down below. Make sure to subscribe. It does a lot for me and helps grow the channel. And also make sure to check out that Discord, completely free. All right, so I'll catch you in the next episode.